Johnson Chukwu, Managing Director at Cowry Asset Management, joins us via Skype from London for a discussion on how this news will impact the markets here in Nigeria. Johnson, thank you so much for joining us. And earlier I was speaking to Gbite about the likely outlook for the market, and he is quite positive that continuation is something that the markets will embrace at some point. But I want you to reflect a little more on how significant it is that the opposition has not considered defeat yet. We know that there are quite a lot of views on the quality of these elections. Some are suggesting voter suppression, some are suggesting irregularities, especially in the north where we know Buhari did very well. So overall, do you think that investors will wait and see what happens over the next week or so, or do you think that we may begin to see those investment flows moving in now?
Well, I think the fact that the opposition has now conceded defeat will, to a minor extent, have some dampening effect. Reality is that I do not see a swell of agitation that could lead to a political crisis. So I don't think the fact that they refuse to concede defeat would lead to any major upheaval in the political space. So what I think will happen is that investors will consider that there's continuity in policies, and investors will price in the fact that there's not going to be any major change in policies in the immediate future. So those that will come back to the market will come back on the basis that they have very long-term perspective to investment in the economy. Reality is that the economy is still growing very sluggishly. So I do not expect a euphoria of election victory that we saw in 2015. If you remember, at the 2015 election, there was a euphoria that led to a major rally in all the market indices in Nigeria. So I don't think that will repeat this time around, because we already have the policy template, and we have to live with the fact that the policies are likely going to be continued.
But why we didn't see that euphoria, because many were expecting this result, and yesterday we saw the markets actually fall in Nigeria. What's your view on the sectors that are likely to move on this election victory? So which sectors do you think are likely to outperform as a result of a Buhari win?
Well, I think the likely beneficiary of the Buhari win would be the consumer goods sector, particularly the fast-moving consumer goods. Reality is that the government is a welfarist government, so we should expect that those who will be direct beneficiaries are those at the lower rung of the ladder, and their basic consumption and those fast-moving consumer goods, particularly where there's bulk breaking. The industrial sector may not likely see any major rally. The financial sector will basically be at the same level. I don't imagine any policy changes. Interestingly, with the Buhari victory, you remember that the opposition party presidential candidate had made a pronouncement that he would remove the CBN governor. So one can almost hazard a guess that the CBN governor will retain his position. I mean, his mandate will be renewed. His appointment will be renewed in June. So you're going to see some level of stability in terms of policy environment as related to monetary policies. I do not know who the government will appoint as the Minister of Finance, or whether they're going to continue with the existing cabinet. But by and large, we should expect that there may not be any material change in policy orientation or policy that could either fast-track the economic growth or weaken the economic growth.
Right. Gbite, you want to chime in?
I agree completely with what Mr. Chukwu has mentioned. We're not going to see the rally because, again, the optimism is not there. Even if the PDP were to contest, which we think they will, due to the margin of the victory, we think it would stand most likely. Now,
yeah, I wanted to get your point on your views on the point that Johnson just raised, which is the personalities that may be part of this government. In the past, for instance, in the Jonathan and Obasanjo era, we had people like Ngozi Okonjo-Iweala, who, if you like, brought some credibility to the government. There's a sense that we don't have those type of personalities coming to the table with the Buhari government. Your perspective on, one, whether or not that's likely to change, and two, whether or not that is important.
Well, as I mentioned earlier, we said hope definitely is not a strategy. But looking at what has gone in his first term, it would be wise, and I would have thought that he would want to do things differently, especially when there's so much he has major opposition. He has people, and he has a lot of people looking at him, that what exactly are you going to do for the economy? That there's a lot more to the Federal Republic than, security, that while you're trying to secure the country, we do need to be growing. So one would hope that he would not, it wouldn't take as long for him to put together people in places, people like the Minister of Finance, for example.
Right.
But it's policy driven. If he comes out with a couple of policies, I mean, what we're looking for here, the major thing that is missing from the Buhari administration is optimism. Business optimism.
Right.
It's people believing. It's not. It doesn't necessarily have to be right.
Okay. Let me go back to
optimism.
Right. Let me get back to Johnson and get his thoughts on that. Reflecting on the tenure of President Buhari, what would you say are the lessons perhaps learned that we could see some tweaks to his approach in terms of policy? One that I think stands out for me is on infrastructure, trying to get private capital to build roads and other infrastructure. We know about the well-publicized deal that was to get Dangote to build a major road in Apapa in Lagos, for instance. Do you get the sense that maybe some lessons have been learned and now we're beginning to see a change in approach?
Yes, certainly. Every human being will learn lessons after being in power for 4 years. There are a couple of lessons beyond that. I mean, if you talk of the economic policies that the government has modified its previous position, among which was the issue of exchange rates. We saw a very long time when the government maintained an exchange rate of 187 or thereabout, 197, and eventually had to allow that to adjust to 306, and basically we now introduce the investor and exporters window. So there have been policy changes. Secondly is the issue of visa on arrival. I mean, this is a government that one would say that is focused on security. For it to allow visa on arrival was a major departure from the security focus of the country, and has realized that that is working, which led to improvements in some of the standards of measuring competitiveness. Then you did mention the issue of infrastructure build. The executive order 7, I think it's executive order 7 or 6, where the government has now permitted private sector to build a few road infrastructure. I think we need to expand that into a law that will deal with private sector investment in physical infrastructure, so that we can replicate that in multiple places beyond the Papa and a few of those roads that have been earmarked. It has to be at that realm where the legal framework will be defined, the commercial framework will be defined, and then investors will be invited to bid for some of those infrastructure, particularly highways and maybe rail corridors. It has to come to that extent. But the reality is that there have been a few adjustments in policies, but that is not sufficient. We need to see a material shift in policy or economic policy of the government. We need to see a heightened level of policy engagement to grow the economy beyond the 2.38% we saw in the last quarter of last year.
All right. Johnson, we'll have to end it there. Thank you so much. Maybe a final word from you, Gbite, before we go.
I'm optimistic, very, very optimistic. Some would say it cannot get any worse than it was during the first term, although we both know it can. We believe that he should have learned. They've come out and they've given him the mandate to do it for another 4 years. If he looks at a number of the mistakes which he did within his first term, and just as Mr. Chukwu has mentioned, with the right policies, there's a lot to be optimistic about. But if he is to stay, not listening to the business community, then we might be in for some troubled waters. But I'm optimistic.
Interestingly, I was just taking a look at where the NSE All-Share Index was 4 years ago. It's pretty much flat. So
yeah,
we'll
it's pretty much flat.
Whether or not this next 4 years we'll see a rally there. Johnson, thank you so much for joining us, and thank you so much, Gbite, for being on the show today. Johnson Chukwu is the Managing Director of Cowry Asset Management, and special thanks to my guest host today, Gbite Oduneye, founder and CEO of A&O Acquisitions.